Markets are up after Jerome Powell speaks and indicates that the Fed will not be getting more aggressive than 50 basis point rate hikes at future FOMC meetings, indicating that the Fed is going to do what it needs to do to fight inflation, but it's not going to get crazy and hike rates 75 basis points or 100. At least he's not telegraphing that. And he said all options are on the table. We're going to remain nimble, as he's been saying. But he said he doesn't anticipate any more than a 50 basis point rate hike at each of the next few meetings throughout the rest of the year. So they're going to monitor the environment. He said that the economy and the labor market is strong and robust and can handle changing monetary policy, tightening of monetary policy. So they're going to start reducing the balance sheet, but it's not significant. So the markets are reacting in a positive way because the Fed did not come out at all hawkish. Again, they are mostly dovish, everything that's expected and still way behind the curve. So it's going to be interesting to see how this plays out. It's about an hour before closing, so we'll have to see what the markets do and how they react and respond into close. So that's the big news today, is that markets rallied on the news that was already baked in. And we'll have to see how that continues to flow throughout the rest of the week and throughout the rest of the day, obviously into the close. So all eyes are on that. Let's take a look at the crypto markets right now. Well, the stock market, the Dow's up 2%, S&P's up 2%, NASDAQ's up 2%. So everything's up 2% across the board. So nice little bounce for the markets. We'll take a look at the charts here, and let's go ahead and take a look at the daily. And here's the Dow Jones on the daily. Nice little bounce here in that critical level that the market needs to maintain. The question is, can it hold up? This is obviously a Fed bounce on good news, a little bit of technical bounce built in there. The NASDAQ is still below critical support level. And this is the next higher low that if it takes that out, more downside can be expected. S&P, again, hanging, took out this last higher low right here. And if it takes out this level here, then there could be more downside for the S&P. So everything getting a bounce across the board. Let's take a look at Bitcoin. I've got a couple of trend lines drawn here on Bitcoin that we've been watching. So I like to use the closes for trend lines, and price respected this daily close trend line quite often. And then when you look at the wicks, a lot of people have been drawing the trend line using the wicks, and price has respected that on this downside. So on the closing, it broke this, came back checked, got rejected, and now it's bouncing off that lower trend line of the wick lows that we've had here going back to January, late January low wick at 33,000. Then we had one in February at 34,000, and now we're at the bottom of this channel here at 37,000. So we'll have to see if it can get back above this level here and what price continues to do from there. And the idea behind all this, same thing at the top of the channel. I've got the closes drawn that price has been respecting. And then there's also the wick line that price hit a couple of times. So these are the channels that I'm watching. And then ultimately what could potentially happen is price could reject off of here, bounce around, come back, break, and then check on this level and continue up. So that's what we're looking for in terms of continuation. If this is just a technical algorithmic trading response, then price could continue to break down, hit here, break, bounce, come back, check, and then roll over for further continuation to the downside. So these trend lines are critical to watch in terms of where price is. And I know a lot of people don't like trend lines, but I like them for entries and exits. They do show major support. So this was a good entry right here, especially ahead of the FOMC meeting. As we know, Powell is very weak in general, behind the curve overall, and he is not going to surprise markets. His style is to telegraph well in advance like he's been doing. He does not come out and surprise the markets. So that's kind of what we're seeing in terms of response. Let's take a look at the hourly. The hourly price action, Bitcoin's had a nice little bounce here, but all assets, especially the large caps, all look exactly the same, all doing the same thing. This is that local market low that we've seen that everything has bounced off of. Cardano had a nice little bounce, Link, Crypto.com had a nice little bounce. So we'll just have to see if this can continue in the near term, or if it's just a technical relief rally bounce based on the Fed decision, and then roll over for some more downside to ultimately find the bottom of the market cycle. So a lot to kind of take in, keep an eye on, especially as we go into the weekend. Ape coins had a lot of action here lately. Let's take a look at Ape coin. Elon Musk changed his profile pic, so Ape coin popped about, on that news, 21%. It dropped back down, it's back up again. So Ape coin's kind of bouncing all over the place, as apes do. So we'll have to keep an eye on that. Here's Doge, little pop. SHIB, little pop. So everything's pretty much doing exactly the same thing. So that tells you this is all technical. So it's all algorithms, all technical, where the formulas say, if the Fed does this, then do that. If the Fed comes out hawkish, then sell. If the Fed comes out dovish, then buy. And then these are all programmed for certain technical levels, 10% bounce, 12% bounce, things like that. So we'll just have to see how they all play out and how things develop as we continue on through the rest of the day today and throughout the week. So these are the things I'm looking at right now. No big or significant news beyond the Fed. The markets are digesting what the Fed is saying. Powell's going to be speaking the rest of the day today, maybe to the Senate banking committees tomorrow, things like that. So we'll continue to see if anything new develops. But right now, he's saying we raised the rates half a point. We're going to start reducing the balance sheet. And that's it for now. We're going to watch and see what happens. And he's kind of saying that he thinks inflation, some indications that some of it's peaked, some of it might get worse. So they're just going to watch it, monitor. So the market likes that. Nice little rally. And then it'll digest the real results and effects of inflation and other things as we move forward. So these are the things I'm looking at. I'll see you in the next video.